What is up, everybody? Ted here with Bodies and Wicks. Oh man, so yeah, crazy story. I apologize for one that I haven't made a movie for a while, or a short, whatever this is, for a while. I know I have some Patreons out there helping me with my site, and I apologize I haven't lived up to my my patriotic duties, so that's why I'm making a video. But first, after I was sitting here, I'd actually been making a video for about 2.5 hours, and well, not 2.5 hours, probably about 2 hours or so. And I look up and I realize I hit a hotkey that paused the recording after 2 minutes and 30 seconds of it being in. So yeah, that's what happened. So there are a couple good things came out of this. For one, I kind of was gonna do this on the fly, and didn't know how I was gonna present this or how I was gonna talk about it. Now I think I have an idea, so that's one thing good that came out of it. And actually, I think that's probably about the only good thing that came out of it. No, for what I usually do, especially with these quick technical analysis series, is that I will present primarily a crypto, and I'll tell you why the crypto basically follows smart money theory, right? And smart money theory is basically something that's came out of primarily the Forex world, but it has it can be used in any kind of asset class, I guess you could say. So you can use it in equities, you can use it in bonds, you can use it in commodities, you can use it in like I said, foreign exchange or currencies. And I've been trying to prove recently that it works in cryptocurrencies. A lot of people say that cryptocurrency can't be manipulated, it does this, it does that, and I'm trying to say it behaves just like everything else. It behaves just like Forex, it behaves just like indices, it behaves just just like every other asset class out there, because it follows an algorithm, right? It is a pre-programmed algorithm, right? There are people who put in this algorithm even in crypto, it does say that there is an algorithm sometimes or whatnot, but no, it's not that kind of algorithm. It's an algorithm that is basically provided by and brought to you by the people with the big checkbooks and the big wallets, and people that can push around the markets easily. And this algorithm can be manipulated and things like that. So we do not believe in retail theory, which means we don't trade off trend lines. Things like harmonics are not a thing in our world. What else? There's no such thing as what else am I trying to think of retail theory that's just so obvious that I can't even think of it right now. Channels, come on. I mean, yeah, there's like short, everybody tries to point out like these short little channels that like happen like all over the place, like all these little, it's like if it was a real channel, it would go on for a very long time, but it doesn't. Instead, you're trying to use this to make a point for your triangle that if it goes off of here and bounces off this part of the triangle, then it goes off there and then it goes this way. It's like, no, No, it's an algorithm, and the algorithm is based off time and price, and it also is based off of liquidity and balance. Like, that is what the algorithm is based off of. That's all there is to it. It doesn't have to be this complicated. There's no triangles or bull flags or bear flags or any kind of all this crazy stuff that you guys think of. It's not that complicated. It's literally you can naked chart everything and be 100% completely fine, and everybody would be okay. And you know, and so many people try to make a chart look pretty and everything just to prove a point or something like that. So it went up, it hit its volume imbalance, and we thought it might continue moving up and try to go up higher and clear out this liquidity, but it didn't do so. Instead, it rejected and went down last week, and I don't expect it to continue to try to move up this week. I expect it to continue to try to keep going down. So we'll see if you know, these go down along with interest rates, as long as they're going, you know, hand in hand, and as well as stocks and commodities are also trading kind of similar. We should probably see a bearish dollar, especially if stocks and commodities are going up, or stocks are going up, commodities going sideways either, or the dollar is probably going to be bearish. But if the dollar does go bullish, I might see the indices go bearish a little bit. But what I wanted to show you first thing, let's see if I got it here. Still, here we go. So one of the first things I wanted to bring up was the SPX, or not the SPX. This is this is all the indices here together, and I want to go by day. So, and let's go all the way back to pandemic. All right, and then, so as you can see, and this is something I'm going to try to predict here. Not really predict, but try to give a peace of mind, maybe try to convince you of. Maybe we'll see if it happens or not. But if you look through this period here, looks like around January to, you know, February, somewhere around that time. Here is the SPX's blue, US 30s green, Nasdaq's in orange. So here you kind of have these guys. Their rates are kind of, or their, you know, the, not rates, but the prices are all kind of going up steadily, you know, and then it has like a little dip right here. We have, instead of going up steadily, we had kind of make a big high, and then we make a bigger high, and then we make a bigger high, and then, you know, after that they all kind of make this curvature here. Who cares? And then what happens here with the Nasdaq is it make kind of a big drop, right? You see that big drop there, as to where these two don't make that big of a drop. So that's the divergence in these indices, and you kind of have to pay attention to these divergences, because they tell you some of they'll tell you these things. They'll tell you like, hey, these guys were kind of normal, but this guy definitely wasn't. You know, he went way up this way, which led to this guy falling down a lot harder, and these guys kind of you know, slowly coming down kind of thing, you know what I'm saying? So with that being said, I'm looking over here at what's happening right now. Again, we have Nasdaq, bigger bulge, like kind of here, bigger fall, right? As to where these kind of had a smoother little sail in. They made a dip, right? But all these made dips. And then except for here's where things went a little bit different, right? So he went low, these guys went high, kind of, wasn't too high. Now, after that, both of these made a dip right here. What is this, 18th of June? This is about a month ago. Right, 18th of June, these guys made a dip. After that, they kept going up. This did not make a dip. This went higher. And it continued to go higher. So now it's getting to be the point to where, and plus it broke these highs to where Nasdaq could be at the point to where it could actually make a bigger fall, just like it did here, just like it did here. You know, Nasdaq has these big moves, and if it's moving against the grain and it's in divergence with S&P and the Dow Jones US 30, it could make a pretty big fall. I wouldn't say pretty big, but it could make a fall that could be significant, I guess you could say, is what I'm trying to say. So yeah, I'm not saying it's going to happen this week. I'm not, you know, but it could happen fairly soon. It's just one of those things I'm saying, hey, watch out for. There's definitely divergence here. So if you're trading these, you know, watch for US 30, you know, to have that potential to fall because of these, right? Now, these are all, you know, the major indexes, right? Major indexes should be following the same pattern, or I would say same pattern, but they should be kind of trading in the trending in the same direction as the CRB index. Now, CRB index is here. This is the, if you don't know what the CRB index is, look it up. But it's basically all the commodities. It's commodities index, right? So commodities and stocks should be trading about the same. If anything, the commodities might give you a little bit of a heads up of if there's going to be a turn ahead of time. Which, if you look up here, you see the commodity index kind of fall. So hint, hint, you know, if the commodity index, I mean, especially if you lay it on top, or if we compare this to US 30 or US 100, right? And look, I mean, doing almost the same exact stuff. Except for this comes up here. And here's where you have the CRB index fall off. Here, it'll fall off a little bit, but it didn't fall off as big as, you know, the CRB index did. So this is where I'm thinking, you know, this could be the indicator as well, that Nasdaq could have a falling, of course. So anyways, I just wanted to point that out to you always, especially if you're doing, you know, intermarket analysis, if you're doing any kind of analysis between indices. Compare them, check them out, you know, see if there's anything strange between them. You're not going to be able to just look at one index and understand what's going to happen without knowing what's happening between all three, because they're all three related in some way or another, except for really Nasdaq. I mean, the US 30 is basically the top 30 companies of the SPX 500. But other than that, they all should kind of move almost in a similar fashion. Nasdaq's a little bit different just because it's the tech sector, it's, you know, the top 100 tech. But you know, and the S&P is just the market. But just things you should know if you've never looked at it that way. Take a look at it that way. I'm gonna go ahead and get rid of these guys off of here now, and we're gonna look at the S&P. And when I was looking at the S&P earlier, we're gonna get off the day. I'm gonna go to the 4-hour. And last week it was crazy because it was just, here's the thing with the S&P is it has been, you know, trending the same direction. We really haven't seen anything that I mean, we've seen bullish or bearish moves, but we haven't seen anything point toward the direction of bearishness that. So what I was doing was whenever I started marking up the chart for the S&P, if we were to see anything bearish come out of this first, what we got to do is see if it's going to take out this liquidity. If it is going to turn bearish, this is probably the first thing I would do is to look here. Look to see if it's going to go below and take out this liquidity. If it just drops below, especially with these spikes still here, you can probably move in on them. There's probably, if it just runs right below it, that's going to cause an order block is what that's going to do. I don't know if I just moved anything or not. But if it causes an order block, once it comes back up to it, boom, it's going to hit it and probably fall. So but I had been playing around with this, and quite a few different scenarios I came up with to watch out for. Of course, the most obvious, the most I wouldn't say obvious, but yeah, the one that we would expect to happen would be, you know, put your Fibonacci at the bottom, go to the top. Now I was saying, look at this order block right here. This order block is running right below the 62% of the wave. So that is discount prices. So that is where your people with the biggest, deepest pocketbooks, this is where they love to buy. They love to buy below the 61%. Or 61.8%, and this is just below it. I mean, so it's like perfect timing, perfect area for them to buy. So in a perfect scenario, this would fall and hit this area probably right around that time in the morning, about what, 9:30 in the morning, 8:30, when as soon as it opens, or around the time when the speaker starts. 10:30 in the morning, and then hit that, and then boom, turn around and go the other way. So we'll probably see it fall throughout the night, and then it may hover above just the breaker that it created, because this is what happened from last week, right? You had the fair value gap that was created here, right? So let me go ahead and put this here. Yeah, the 4-hour fair value gap that was created, it came down, broke down right into that. And of course, like I always say about fair value gaps, it's a magnet, but it's also a detractor. So as soon as it sucks into that magnet, boom, it pushes it out, goes up above, breaks the high, and then you have, you know, this, yeah, the liquidity spike down below. And then it ran right down through that liquidity spike. So what did that do? Created a breaker. So as it falls, what did it do? Here is your sell side liquidity here. So of course it took out your sell side liquidity. So anybody that had or was thinking that this was the support area, unfortunately probably got knocked out if they had their stop loss sitting here, or if they had, you know, a buy limit set in here with a short stop loss, whatever it was that made them think that this was support. This thing came right through and knocked them out, and that's what smart money does. It'll come through and just knock these right out, and then boom, as soon as it did that, it halfway, this, I was trying to do this, and then this right here, the reason I have this here is that this is halfway through this. Let me just put this over it. Oh, come on now. That red candle there, that order block, that's about halfway through that red candle's order block. So if it were to go bearish, watch for that level there, watch for it to either hit that level, maybe bounce up and then go down, or just go straight through it and then come back up, bounce that level. That's why I have that level there. This level that it stopped at was pretty much at the same level as this bullish order block as well. So how you measure halfway, you just take your fib, put your magnets on it, and then you can see it was just a little bit more than halfway. So, and the same thing could happen tomorrow. So I'll just put that. And that's one thing I didn't do the last one, because I didn't actually measure that out to see how far it went through, halfway through that order block. So a little bit more than halfway through that order block, turned around, came back up. Actually, I don't know what this line is here. We can just get rid of it. Back over here. Okay, so then after it did that, came back up, then it hit, what did it do? It hit this breaker, of course, then came back down, and then went back up through the breaker, came back and tested it, and then went back up. Boom, we were done for the weekend. So what I was thinking whenever I was watching this is I was thinking it was probably going to go short once it came back to this breaker again, and we'd probably see bearish movement. But we didn't. It actually didn't stop there. It moved up. So I'm thinking we're looking at, you know, especially with institutional order flow, we're still looking at it to go to higher. I wouldn't say higher, well, maybe higher prices, but I don't think we're looking at it to go bearish just yet. But if we were looking at it to go bearish, these are the areas that I would be looking at, that I was pointing out. That, and also if we move this, right, if we go down to the 1 hour, and move this to here, then you have this, what was the 4 hour fair value gap that ran right through that, is right in this fair value gap. It's also going through this 1 hour fair value gap. So again, this could be another perfect place. It's, you know, second time I've said this, you know, it could be one of those things to where it could go down and then just hang around here until about 10:30, and then all of a sudden spike down and then boom, go back up. Could be, we don't know. Or now that we've made this breaker, the breaker could be acting as support, which it usually does. So if we take this, put this on top of the breaker, now we got this order block here that's just under the 62%, 61.8%. that would fill the fair value gap. So this would fill the fair value gap, hit the order block, and then go back on up here. So I guess it's just going to depend on where the price is tomorrow morning, and we'll find out then. And even then, you know, if we go back to the 4 hour, well, actually we could go back to the 4 hour. If we went back to the 4 hour, this red line that I have drawn is basically the bearish order block. If we wanted to get closer, I would think it's this guy here. That would probably be your bearish order block. Just because it has that solid. So if we take a real close look at this candle, you can see it has a very, very solid bottom. No tails, no wicks. So you can tell as soon as that hour clicked over, it just boom, went straight up. So that's generally whenever you see the institutions at play, the algorithm at play, it didn't. Because, you know, whenever you see price, you're always seeing it move up and around, move up and around, move up and around. But if it has a solid bottom and it does that, that's usually telling me that, hey, the smart money is here and it's pushing it up. And that's what's happened here too. Smart money here and pushed it up. Here, smart money. I mean, it has a little bit of a tail, pushed it up. No tail at all, pushed it up. So, and then finally slowed down just a little bit, but then came back and boom, pushed it up. Probably because everybody was thinking it was starting to go down. So everybody was starting to sell. Smart money said, nope, boom, bought, pushed it up, took everybody out. So you got to be careful, watch out for those things. And also same thing for that order block. So that, or this bullish order block tomorrow, right? So if we're looking at the hour, little bit of a fair value gap there, not much. Here's a wide fair value gap. Here's another wider fair value gap, and that's all inside this 4 hour fair value gap. So you could see, and then as you can see, the rest of this all balanced. No fair value gaps through here, you know, all sitting on top of the breaker. So this is what makes me think that this could be this could be the area to where, you know, it hits price and turns around. And that price here at this order block is around 43.45, right? And this is CFD prices. This is not future prices, okay? I'm not talking about futures. I'm talking about CFD. So those of you that use MetaTrader, that trade the SPX, this is going to be more closer to your price. For futures, I'm sorry. Here, let me bring up the futures price for you really quick to see if I can't get something similar on that. So that would be yes mini current contract. No idea what these are, but looks like this is the bearish order block I was trying to draw from earlier. But if this is the breaker sitting up to here, and then this is the bearish order block, your futures price is looking somewhere around 43.36. So 43.36 as compared to 43.45. So not too much of a difference at all, to be honest. So the CFD prices, futures prices, looking about the same at the same area, for us to, for if we want this thing to hit this and go bullish, if we think it's going to go bullish and continue on with the trend that it's in. But if it's going to go bearish, again, watch for it to get below the lows, which is around 42.79. At 42.79 on the futures prices, CFD prices 42.90. So that's about a $10 difference, actually. Interesting. All right, so that was my idea that I wanted to throw out there for the SPX. Now, next I wanted to get to really quick was the Nasdaq, and then I'll get out of your hair. I don't want to connect. Sorry, I should probably explain the indicator down here. So this is the Williams percentage. This is about the only indicator I use. I'll use it every once in a while to try to find explosive moves. Kind of works similar to an RSI. You can tell when it's oversold. And one thing I wanted to say about that with the SPX is that now you can see that it's coming down into, under the 20. Once it usually hits about the 50, and it comes to about the area that you think it might turn around, or actually, sorry, somewhere in between the 50 and probably the 80. If it's hitting the order block that we want it to hit right around that time, or right at this time, right when it's just getting to be oversold, that's probably about the time when you want to think about putting on a bullish position. Everything I am saying here is not financial advice. This is all opinion only. I'm not a financial advisor, so please keep that in mind. I'm just speaking my opinions and my opinions only. I'm not a broker. I'm not anything like that. I'm just talking as if I was talking to myself. So that's what I would do if I were in that situation. And price came down, I would be watching this Williams percentage as well, and watching it once it came down to about this 80%, or sorry, this 80 level, and see if it's anywhere near one of my targets to where I want to go long. And if it is, that's when I would probably go long. But that's just me. I'm not telling you what to do. I can't tell you what to do. It's illegal for me to tell you what to do. So, all right. So with Nasdaq, what I wanted to point out, especially what I was saying earlier with divergence, and that Nasdaq probably has the highest probability of dropping, was that it did not evolve. It was the one that did not break the high. So, and it still hasn't. So I have a feeling that with smart money and the way it works, it is going to break the high, but it's going to break the high probably early on, after the bell opens, maybe within the hour or so, and then that's it. Then it's going to drop. So be wary of that. Be wary that if it gives you, it could drop all night, and or drop to a specific spot and then give us this great look that it's just going to keep going up. And then, you know, just before the bell opens, you know, you start seeing it go doom, especially if it comes down to like, and the reason I drew this red line here was because this looks like a perfect area for support, right? Doesn't it? It just looks like that good area for support, to where, you know, this quite didn't get up there, you know, but it's finally did cross this line here. And you got these guys coming down here. You know, it just looks like a good area for support. So, you know, this thing could come all the way down here to almost a support line, pull back up, and then right around that time in the morning you could start seeing it. And you know what I'm talking about. If you've ever watched, especially, you know, Nasdaq, you start seeing it. You do the do, and you see, and the next thing you know, you see another do, and it'll pull back a little bit, and then do, and it just looks like it's getting ready to fly up, and then all of a sudden it'll go do, and it'll hit it up really quick, and then boom, it'll fall. That's what I have a feeling is what is going to happen with Nasdaq tomorrow morning. It's gonna fake people out. It's gonna make people think it's got this look, that it's got like this perfect run on it, and it's gonna come up, and then as soon as it crosses that liquidity line, it's gonna take that liquidity and then turn around and pull it back down with it. And then, or it could play around that line, that liquidity line, like it has back here. Right here, I did this earlier, show you, to illustrate that you have these equal-ish highs right here, right? So, well, these two are definitely equal, but, you know, kind of equal to here too, to kind of illustrate that you have this resistance zone here, right? And everybody's thinking there's a resistance zone. So what happens when the price over here gets close to it? Sorry if you're seasick, I know. So you see it coming up here, and then you start seeing it looking like it's about ready to drop, and you see it come up here, and then you see this, and you see this one, it looks like it's about ready to drop. And this is when I'm sure everybody probably put all their money into it to drop, or at least, you know, if you're playing futures anyway, to sell or to go short, everybody probably put their money in it to go short, and then next thing you know, boom, goes above and it breaks that high. So that's why I always tell people to be wary of equal highs, because it's always going to break them. It's going to break them because it's there to make people think that there is a resistance when there is not, right? So it could get up there, almost fall, boom, break it. Instead it breaks the high, and then it comes back down, pulls back up, then it looks like it's going to fall, and everybody's like, yes, and they chase it again, right? And they're putting in their money and for it to fall, and then all of a sudden, boom, goes back up, breaks the high again, looks like it's gonna fall again, and then boom, turns around, goes back up. So be wary of equal highs, be wary of support resistance. Say it does not exist unless it's on a long-term, long-scale level. These short-term ones, don't trust them. Do not trust something like this to be a resistance spot, because you're going to have this guy come in here and snake through it just like this, and I can't tell you how many millions of dollars was probably lost in here from retail traders, while the smart money people knew what was going to happen, and they just sit there and they laughed and they waited, right? And you knew what they knew. They knew the algorithm, and watch me teach you the algorithm right here. So even though this may have spiked down, it still doesn't mean that there couldn't have been a or this is only this only this broker maybe the spike wasn't on another broker, right? And you look up this way, we have a fair value gap. Boom. Right, look at this. Right on top of that fair value gap, comes right down inside the fair value gap, pushes right back out again. Another fair value gap is created. Boom, comes back into that fair value gap. Boom, goes back out. Right, so these are these are the things that we look for. I always tell you to watch out for these fair value gaps. One was right here. It barely got touched to get into though, but it did enter it and then move on and then go on to create other ones, right? I'm also looking to see if there's any breakers or anything like that that could have, you know, caused it to stop, you know, going in a certain direction. And it looks like it was only just fair value gaps, but still, that's all you need. If these two guys right here, look, here, let me get rid of this fair value gap. Actually, this probably wasn't even it. It was these two guys. This right here is your order block. Order block all the way across. Guy came down, boom, hits the order block, moves away. So, yeah, because there wasn't a fair value gap. Well, at least in this picture. Like I said, in other brokers, there may have not have been that tail there. That could have came down to that fair value gap. Either way, it came down, came close enough to this order block that it rejected it, moved on, moved up, came back down into this fair value gap. After they got into the fair value gap, got rejected, moved on, went up. There you go. There's your algorithm at play. Everything I talk about, all you know, fair value gaps, order blocks, breaker blocks, all in that same area that snake through that equal high. So tomorrow, Nasdaq, I have a feeling it's gonna do something similar. You know, I wouldn't say something similar, but it's gonna do something with this liquidity, right? So there's a liquidity line right here where there is buy stop sitting right here, right? So people have a long position sitting right here. And they probably have it sitting, they probably have a very, very short stop loss. They think it's gonna go through it, right? Whatever this thing does, you know, this thing could snake its way down through here and then make a convincing argument that it's about ready to bust through. Oh crap. Make a convincing argument. Well, convincing argument that it's about to bust through, and then it goes. And it does something like that. So that's what I'm saying about watch out for these highs, right? These highs that people think are resistance, because they're not, right? True resistance lies in the form of a breaker block, a mitigation block, an order block, rejection block, those things. That's where true can't think of the words. It's getting so late now. I've been doing this for a while. That's where true support and resistance lies. So just be careful for Nasdaq tomorrow, because it's going to do something squirrely like this, I have a feeling. And I'm going to watch out for it, and I'm going to wait for it to break the liquidity, and I'm going to see how high it gets before I actually go short, because I have a feeling that's what's going to happen. I'm not advising anybody to do anything. I am just speaking on my own mind. I'm speaking on my own behalf. I'm not telling anybody what to do. I'm just thinking out loud. Okay. Anyways, that's enough for me. That is enough of the video. It's at 45 minutes, and then you guys are going to watch this long anyway. But thank you for watching. As always, I love you guys for watching my videos. If you did stick around all the way, if you could, please do something for me. Hit that subscribe button, hit that like button, hit the notification button, tell your friends. If you learned something today, hopefully you did learn something today. I always try to get people to learn something about smart money, about what people with the big pockets are doing, how they're screwing the little guy over, and how you should not get caught in that trap. I don't want you to get caught in that trap, because I did. I got caught in that trap for so many months. I'm tired of getting caught in that trap, and I did get tired of caught in that trap. So, find a good smart money teacher. Find somebody who knows what they're doing. Hopefully, I'm one of them that you can trust. That you can sit here and look at a chart and say, "Oh, okay, I understand this now. I understand what the people with the big money are doing." How they're pushing the charts in a certain way, why they're doing it this way. And you have to think like them. You can't think like somebody who's I understand. I was taught from iMarkets Live, honestly probably the worst place to get taught from, because I taught you everything retail, and it is not the place to be taught unless you want to lose money. Unless you want to pay extra money, and if all you have to do, I mean, if you don't have a job and you had enough money to start with and 10 grand, it was probably a good gig, because it could probably help you build and go along the way. But as somebody who has a full-time job, I couldn't sit there and do what they did. And I was watching their videos and it just, nothing made sense to me. So I had to figure out something new, and I found the perfect way to trade and the perfect teacher. And I continued to learn what they have taught me, and it makes sense to me. These lines, these triangles, these bear flags, this all this weird stuff, like it just doesn't make sense. Whenever you think about it, this makes sense. Whoever thought of trading off of triangles and crabs and deep crabs and falcons and birds, whatever it is. It doesn't make sense. What makes sense is price lines that have liquidity. If you've ever traded off Uniswap, you know what liquidity is, right? Same thing is happening on these charts, right? People are trying, the charts are trying to find the liquidity, right? It's also trying to balance, which is also what Uniswap is, right? You're always trying to balance the two prices, right? Same thing is happening on the charts. So with that being said, thank you so much for watching, and share my videos, please. If you can, check out the more videos on the analysis, and always forget to wear your pants. Just don't forget to wear your pants, okay?